is an attorney, conveyancer and PRO at ESI Attorneys. She completed her LLB degree in Port Elizabeth in 2014 and qualified as a conveyancer in 2018 and joined the ESI team in 2021. She's an attorney specializing in commercial and property law and doubles up as a public relations officer for ESI. Today we'll be talking to Jenna Lee about the hidden cost when buying a property. Jenna Lee, welcome.
Thank you. It's nice to be here. Thank you for having me.
So Jenna Lee, how does levy and levy clearance work?
So levies is a fee that's paid over to a body corporate or to a homeowners association, and in some situations both.
Yeah.
The cause of disputes are often special levies, which is a fee introduced during the course of the year to cover unexpected expenses, and it's normally quite a large fee. Back in the day, it was paid just by the seller. Now it is prorated between the seller and the buyer, which is a cost that's often not expected for a new buyer.
What costs are the seller liable for?
So sellers' biggest costs will be the agent's commission, arrear and advanced rates that's paid to the municipality. The seller is liable for all arrear rates and rates for a 60-day advance period. Anything above date of transfer, they will be refunded or credited for. If the seller has misplaced his title deed, which often happens when the property is not bonded and the bank holds a title deed in that situation, where it was paid for cash, the seller will have the title deed with them, and if they've misplaced it, they will have to pay for a replacement copy. So that's another cost that sometimes is unexpected in the transfer process. The seller will also be liable for bond cancellation fees if their property is bonded. Sometimes they think because the bond is paid up that they don't have to pay any fees for the cancellation, but cancellation is the formal process of actually cancelling the bond by a conveyancer, and that will attract a fee.
So what would you say is the buyer's biggest expense?
So the buyer will pay transfer fees and certain disbursements. One of them is transfer duty, which is a tax that a buyer will pay on property that they buy above 1 million. If it's below 1 million, it's exempt from transfer duty. And if it's over, then it attracts a tax on a sliding scale, obviously upwards on property above 1 million. That amount is paid over to SARS, so it's paid as part of the pro forma account that we send them, and we pay that as a disbursement to SARS. They will also pay as a disbursement registration fees at the deeds office and rates clearance certificate fee and levy clearance fees.
Last but not least, what is the difference between bond cancellation fee and penalty?
So when a seller has a bond over their property, that bond must be cancelled before or simultaneously with the transfer to the new buyer. When you cancel a bond, there is a cancellation fee involved that's paid over to the conveyancers for attending to the formal cancellation of the bond. So a penalty is an amount that the bank will charge you when you cancel your bond without giving them at least 90 days notice that you're going to cancel the bond, as they expect a certain amount of interest during that period. So they will charge you a penalty for cancelling the bond if you don't give them a 90-day notice.
Jenna Lee, thank you so very much. This was truly insightful.
Thank you for having me.
At ESI, they pride themselves on expeditiously assisting people and corporate clients. They are experts in the field of real estate law and have a thorough understanding of the commercial and legal requirements. ESI is able to assist you with all your property acquisitions and disposals, ranging from individual properties to entire property portfolios. If you would like to find out more or make use of their services, feel free to visit esilaw.co.za or get in touch with them directly by sending an email to info@esilaw.co.za.